Welcome back. Epigral is the next stock on our radar. It's in the spotlight. The company reported weak margins in the third quarter. Revenue from operations also declined 12% year-on-year, while EBITDA dropped 26%. Maulik Patel, Chairman and Managing Director of the company, is now with us to talk about the way forward. Maulik, first, the reason in a nutshell for the revenue and margin decline, and where do we head from here? Are you seeing Q4 to be better than Q3?
Yes, Q4 is going to be better than Q3 because we were expecting that the first half of the FY23 was very bad in terms of the chemical. All the prices were slashed compared to the FY22 and FY21 level. So almost all the prices have reached to pre-COVID level except the energy prices, and that was impacting the margin right now in the industry. But now we are seeing the recovery started coming up in terms of the majority of the volume. And the domestic market is picking up very well in terms of the chemical consumption, in terms of the construction chemicals, in terms of infrastructure, automobile, everything, consumption is picking up. So that we can see the demand in domestic sector is much better than the exports right now.
Maulik, what's your mix right now, domestic and exports?
So we are doing 8 to 10% kind of thing. We are doing exports in quarter three. And 90% is domestic demand, and that started picking up very well right now. And quarter four, I think we can see further improvement in the domestic demand.
Okay, so that's good. I mean, I think then from the top line perspective, there's good demand, and that's good news. What about input costs, and what is the visibility on the margin performance? How might you perhaps end the year?
We believe that the chemical, all the feedstock prices has almost come down to a pre-COVID level, almost bottoms out, and except the energy cost. And I think now we are seeing we are taking advantage in terms of the margin. The demand is picking up, so we are seeing that the margin also is going to go up from quarter four onwards compared to the current level.
So if I'm looking at the right number, and correct me if I'm wrong, I believe you are at about 30% EBITDA margin. Is that right?
In quarter three, we have 26% EBITDA margin.
26%. And is that kind of a level sustainable? Because you just said that inputs have bottomed. And maybe as the cycle starts turning, there will be a bit of a inflationary headwind over there on the input side. So what sort of margins are you hoping to sustain?
So we are seeing that we are able to sustain with the current portfolio which we have. We have diversified to derivatives and specialty more, and we have done the capex more in the derivatives and specialty. We see that the 25 to 28%, it is going to be a sustainable margin going forward in FY25 as well.
25 to 28%?
Yes, 25 to 28% range, I'm saying, yeah.
Okay. That's a significant pickup from the 23% that you've done in 9 months of FY24. You had 3 projects which were due to come on track in Q4. Is it on track? And what will it add to your FY25 performance?
Yeah, so you must have seen we have done the 18% volume growth in FY24 because we have done the capex in FY23. We have commissioned the project in FY23 that is realizing the volume in FY24. In FY24, we are commissioning in quarter four, end of quarter four, we are commissioning 3 projects. One is chlorotoluene value chain, a CPVC expansion project, and then CPVC compound project. All 3 projects are going to commission by end of quarter 4, and we will see that in H1 next FY25, the growth will and volume will come from that projects as well.
Okay. So, I think you're at about 81% capacity utilization levels. As you bring some of these newer capacities on stream, I mean, how quick will the ramp up be?
So currently we are doing 81%. The 2 projects which we have commissioned in FY23, one is epichlorohydrin and CPVC resin. CPVC resin we are running at 85%, and the epichlorohydrin we are running at 55 to 60%. So still we need a ramp up in epichlorohydrin project which we have commissioned in FY23, and in FY24 what we are going to commission in quarter 4 this year. That ramp up will happen probably by end of H1. We will cross around 60. We will reach to almost 60% capacity.
Okay, so I mean, ballpark in terms of just pure volumes on both the key products. What do you expect your volume growth for FY24, the year as a whole, should be once the ramp up starts happening on the newer capacities as well in the fourth quarter?
So we are keep investing in our new products and the derivatives and specialty. So like this year we have done the 18 to 20% volume growth. We are going to do the same kind of volume growth in FY25 as well.
All right, Maulik, we'll leave the conversation there for now. Thank you very much for joining in. By the way, on the Nifty, the recovery